Good morning, this is Jerome Nugent-Smith from Melbourne, Australia. It's Monday the 3rd of October 2011 and the subject I want to talk about this morning is stock market pain. Don't believe in the adage, no pain, no gain. With regard to the stock market, certainly as far as the rest of 2011, 2012 and into 2013 is concerned, it couldn't be further from the truth. In my opinion, global stock markets will suffer up to a 40% decline in the share price indices. That's right, 40%. Much more than that occurred on average globally in 2008, 2009. Yes, in 2008, 2009, some markets suffered a 60% decline in their stock market indices. Russia, for example, and China. Others were in the 20 to 30%, some 40 to 50%. So on average, I think that the 2011-2012 stock market crash will be a lot more severe and a lot more prolonged. And there are a number of very simple reasons for this. Firstly, the problems that existed pre-2008 have not been solved. Secondly, not only have those key issues that caused the 2008 stock market crash not been solved, but in fact the underlying problems have worsened. And thirdly, despite what has occurred and supposedly the lessons that governments and financial institutions should have learned since 2008, 2009, the simple truth is that basically nobody has learnt anything, or if they have, they're not prepared to implement change. And this is perhaps the most serious reason as to why global stock markets are going to crash and people are going to lose vast sums of their hard-earned wealth. It's going to be simply wiped out and in many cases possibly never to return. So it's not a pleasant topic to talk about, but it's one that should be foremost in investors' minds and everybody that's got money tied up in a stock market somewhere. And usually that is in terms of superannuation or pension funds. So, regrettably, this is how I see the situation. What is the solution? Well, it's quite simple. Cash is king. Get out of shares, get into cash. There will be other asset bubbles such as property, so I wouldn't advise getting into there. Put your money in the bank, earn 6% or thereabouts plus, which you can, certainly in Australia, and go away, sit on a beach and have a holiday. Wait for everything to blow over. So, in summary, be very careful about what is occurring now. I mean, the market volatility, which is extreme, is just a symptom, in my opinion, of what is going to happen. I'll provide you with another update shortly. Bye for now.